Friday, August 21st, 2009, and the July existing home sale pace fastest in 2 years. Wanted to burn a video a little bit early here to show you something. And Bernanke says U.S. economy is on the cusp of recovery. So there's the 3-minute chart of the S&P 500. We saw this gap this morning. It ran up, consolidated sideways just exactly where we wanted it to, below the round number of 102. Which was the previous resistance. I have to scrunch that up, go to previous chart. There it is. We were talking about that. It never really filled the gap even, which means that there's a lot of people on the short side hurting here, looking for the door. It looks like they started to buy to cover along with new buyers coming in, bringing in some good volume on this run-up. The next place of resistance in here, right around this round number of 103, which is impressive, and then it stalled. So now we actually have what they call a bull flag forming, right? Not too shabby. And if we can work our way higher, there is a lower swing high in here to watch out for, of course. That's the beginning of a great bull flag consolidation. The volume is declining, which is fantastic. And just looking intraday, you can see that we do have this little bit of a high base forming. Even a 15-minute chart shows that. Daily chart, of course, is just one big green bar. And our next stop, resistance-wise, on a daily chart is 105. So there's some distance between where we are now and 105. However, just realize that we are up 1, 2, 3, 4 days in a row, arguably, at least right now. And there's something else to look out, and that is the trend reading at 0.28. That's extremely bullish, which is almost overly bullish in that scenario. Sometimes the markets need to correct out of that. The trend Q a little bit more normalized at 0.62. That's a little bit more in line with what is not overly bullish, but still looking pretty. And the one that has me just a little bit worried right now, I should say worried lightly, but nice gap down with our gap up in the markets. This gap filled a little bit, almost to the 50% retrace plus some. So if I drop that retracement in, oops, that's a trend line. Excuse me 1 second while I get rid of him. Retrace there to the bottom. So then drop a little 50% retracement in there just to clean up the chart. Remove that. And you'll see that we're just a little bit beyond that 50% retracement. When that happens, you have an X% better chance of making a higher swing low. In this case, we did bleed out, which is great, but now we're all the way back up to that same area, and that is not necessarily the most bullish scenario, even though it hasn't completely filled this gap. So I would watch out for this area right through here to see if we can fill that. And that's layered on top of the spiders, which still haven't filled their gap, but it's basing on their high. So there's a bit of a divergence now between the VIX and the S&P 500 tracking index to my eye. So be careful, very, very careful how you go long here, even though we do have a good volume breakout with declining volume. So anyway, that's just a little bit of a warning. Again, it's also a summer Friday, and just take all those things into account as you go forward looking for your intraday plays on the broad market or stocks that you're going to layer on top of this for understanding the environment that you're in. So once again, great working with everybody. Wanted to burn a little bit of an early video here on the heels of this, and hope you guys can use this going forward to make some money. And once again, thanks for being a part of freetradingvideos.com.